Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, September 24th, 2008. Well, today was an interesting day on Wall Street for no other reason that the continued House questioning of Bernanke and Paulson went on all day, and it's still going on right now as I'm doing this video a little after 5 p.m. Eastern Time. Just fascinating to listen into the banter going back and forth between, is this the right move? How much of the $700 billion that they're asking for should they want to give? Do they want to give all of it? What stringent precautions can be set up so this doesn't happen again? And it's an unbelievable mess, folks. I mean, there's no other way to describe it. But Wall Street took its pause today, and what I mean by that is that the markets were just fluctuating up and down. I mean, it was a non-event day, if you could say, as this kind of was going on. The market needs to know how much the bailout's going to be. They need to know exactly what the terms of this are before they can make a move. And after that move, which I do expect soon, guys, latest it'll be Sunday into Monday. I think this will be done even possibly before that, though, maybe tomorrow. Either way, though, it's on the horizon. It needs to be done. I don't like it one bit. I will be the first to say that this is a disaster waiting to happen for the future, but it's basically, do you want to take your pain now, or do you want to postpone it and take it in 2, 3, 4 years? Ultimately, what started here, I'm afraid, is just a one-way track to disaster. However, by doing this bailout, at least you have a couple more decent years before the negatives really start to come back, and at that point, I don't think there's a bailout that can help. But in any case, I don't want to get into my personal beliefs or analysis. I try to stick mostly to the technicals here and just go over them. So, in all that said and done, the market basically was a flat day today. The Dow was down 29 points. The NASDAQ was up 2.5 points. The S&P was down 2.5 points. So really just a mixed bag out there. You had that pause in the markets today. And people are just waiting on this bailout. So what you're looking at here again is the futures chart, the ESZ8 December '08 E-mini S&P 500 contract. And you can see that really from early, around 8 o'clock in the morning, you just draw these lines out here, and you can see that you basically had a flat market all day in a trading range. The NASDAQ was up as much as 22 or so, and down as much as 8 to 10, I guess, at the differences. And it just kept on fluctuating between that. Ultimately, the market closed positive on the day, at least on the NASDAQ, while the S&P and the Dow closed slightly negative. A non-event of a day. Volume very, very light. We continue to pull back, consolidate off that move, and I want to go to the SPY daily chart to really get into this, because this is what it's all about, folks. We're still favoring the upside here. We expected this pullback, which we had called on Friday after the Friday move. We've got that pullback. It's been a 1, 2, 3 pullback now, with really a pause day ending it here. The question is, do we see more downside tomorrow, or do we start to see the move up coming soon? Interestingly enough, guys, I just want to touch on a few things from the last couple days in the videos to go over. Number one, the call on a dollar bounce continues to be right on after we called that last Friday. You can see the nice move here coming in on the dollar today. The UUP chart showing another advance on that. In tune with that, the GLD down $1.61. We called the top. Obviously, if you're looking for a strengthening dollar, the top on gold is a key there. And you see gold starting to pull back here a little bit. Nice down $1.61, which is actually a pretty nice percentage drop. And the USO, which is the oil fund, also showing a pullback consolidation pattern. Now, the question on these charts are they setting up for another move higher? Because right now you had a nice move up, and you're seeing consolidation, which could be telling us that there's another move up on the horizon. Whether or not we see more consolidation, well, that's up in the air. We'll have to see. Right now, we're moving back into a neutral stance after we called for the jump in the commodities off the weakening dollar. Then we called the bounce, obviously, in the dollar, which caused the weakening commodities. So, obviously, the call here to here, where we reversed the call to the downside. Now we're just going to go into a neutral stance, all right? You've had a 2-day pullback in the commodities and a 2-day bounce in the dollar. We have to wait till we get more information on this bailout. If it's a bigger bailout than Wall Street anticipates, the dollar could get weak again. If it's smaller, the dollar could strengthen a little more, which would mean commodities come down a little more as well. All right, so just be aware of that neutral stance on the dollar, gold, and oil right now. Now, the bigger picture here, guys, let's go back to the SPY chart. This is the SPY, kind of mirrors the S&P, and I want to just touch base on this now. All right, so you had a very solid move up. You had the pullback. Now, you're basically looking at a decent support line coming right in here, all right, and then ultimately right down to here, All right, and the bottom, you're really looking at the bottom here as support lines. These are the support lines on the downside. You can see today on the downside we tested that first line of support. That's something you have to keep watching for. All right, it's going to be very, very interesting. You know, it's almost one of those things. Well, you know, we anticipate another possible move up here, but in the very least, you want to be very cautious about that. All right, because everything is in the government's hands, and I don't mean to be skeptical about the government, but you always want to be a little careful when things are in their control. You just don't know how long it's going to take. You don't know what it's going to entail, and so forth. So, you know, just be aware of that, folks. I mean, you know, if we had no government intervention, if everything was normal, then you could read the charts and be much more confident about it. The chart should play out either way in the correct manner, but you just don't know the whipsaws that can come along the way. All right, and that's the one worry that you have, is that, you know, maybe you see a big sell or a big buy program and then a reversal because of news coming out of the government about this or that. God knows we've seen that recently between all the bailouts and the Freddie and Fannie and the AIG and Lehman. It's just been a craziness of that stuff. So just, again, be cautious on that and be fully aware. Now, should we start to move up, you're looking at first resistance coming in right around the 20 moving average. I'm seeing a decent resistance point right in here on the upside. That'll be first small resistance, then second resistance would be somewhere right around here on the upside. You can see it's going to coincide with the 20 moving average. Ultimately, you could test the highs from Friday, and then that would be very interesting to also see whether or not the highs from Friday play out if we get up that far. Ultimately, you want to watch the long-term angle of this point right up here. This is the everything right here. You can see how much resistance it was. We were never able to get through that on the upside, but that's jumping the gun quite far at this point. We don't need to get that far ahead. All right. In any case, folks, crazy just goings on right now. The market is so on pins and needles based on what's going on out there, and it is really unbelievable. I mean, it blows my mind that this got to this point, especially when we've been talking about this for a year and a half, going back to our video launch back in April, May, June, somewhere in that range when we did our first videos on YouTube. We've done every market day. There's been a video out there, and we talked about this starting to happen because of what was going on. So for them just to be dealing with it now, it's a little mind-blowing to us that it took them this long to realize the issues here when we could see it so long ago. But again, yeah, it is what it is, and you just kind of deal with it and handle it. In any case, folks, talking about a little bit, I want to touch on this because this was just a crazy call from yesterday, guys. We had talked yesterday afternoon about Goldman Sachs. Now, who remembers that? Yesterday's video, right? And those in the chat room remember it as well. We saw that nice buy program coming on Goldman Sachs late in the day, right? And we said in the chat room as it was going on, this is very peculiar. This must be something up here. The markets are getting some sort of cue here because Goldman is rallying, but the markets were at the lows of the day yesterday, and this must mean something's going on. No sooner had we said that, no sooner had I done the video yesterday, probably about 15 to 20 minutes after the video, all of a sudden news comes out that Warren Buffett had purchased a $5 billion stake in Goldman Sachs, and all of a sudden Goldman's off to the races. Goldman had a nice day today, up about $8 on the day. Was up even higher than that after market yesterday and this morning pre-market, but it closed off the highs with a little bit of the weakness in the markets today off of this continued questioning of Paulson and Bernanke. But just to show you guys, you read the charts right here. Something was definitely up. We saw it right here when the market was dropping to new lows. We started to see this yesterday. And look at what it turned out to be. So, I mean, you just read Goldman Sachs is a leading stock. We follow that. We follow Apple. There are a couple other key stocks out there that we like to follow for market indications. And, you know, for most of the day, that held the markets up, but it couldn't do it into the close as we did sell off a little bit there. All right, so good little tidbit there to keep an eye on Goldman Sachs as it is the leader. And Warren Buffett is now involved, which is always a big thing, as he's known for being a very savvy investor. Okay. Looking across the board, Google was up about $6. We'll flip to Google's chart. You can see Google trying to consolidate here. This is a very interesting chart. Google consolidating. Notice the volume here, especially the last couple days, is consolidating. Very, very light on Google. Apple Computer has been a disaster recently, but now you're coming into support down here. It'll be interesting to see if Apple can hold that support on the daily chart. All right, it's been an ugly sell-off here, very, very ugly, all the way from basically 180 right up here, all the way down. Taking a look at Research in Motion tomorrow. Very interesting here, guys. Research in Motion has earnings scheduled for after the bell tomorrow. That's going to be very interesting as this stock has been punished from the 130 level up here just recently all the way down to basically underneath 100. What's going to go on? Are they getting business taken away by the iPhone what's their basic revenue coming in here? Are they going to blow away Wall Street like usual, or are they going to come in even or lower and show a weakening economy? So there's a lot of stuff going on in the next couple of days, inclusive of this whole possible bailout plan, which, again, with the president speaking tonight, by Monday, I do anticipate that there will be news out on this, and it's really going to depend on it. I would guess that it will rally the markets. We are anticipating that rally in the markets based on the charts alone and not even talking about that. But again, it's up in the air. You always want to be cautious here. All right. Have a wonderful day, guys. We will talk to you all tomorrow. Be safe in this crazy market environment.